used to walk these roads with you. Can't remember the last time my way was out with you. To walk these roads with you. Can't remember the last time I went without you. Where do I go? Where do I go from here? Where do I go? Where do I go from here? Where do I go?
You said the same thing I told ya. My eyes are clear, there's no secret. I wanna know, was it serious? I need it clear, my best friend. Isn't easy to show with the weight of the world on my shoulders. I know I told you, it's the best light I know. It's not a game that I am playing, my love. Trying to hold my feeling, I don't know what's right. I'll find the best way, I think that I might.
Yo, what is good? What is up, everyone? I hope you guys are having a great day today. It is Tuesday, I'm pretty sure. Yeah, it is Tuesday, June 20th, 2023. So what is up, man? What is up? Well, the indices, they're not up. On an intraday basis, sure, but on a overall basis, they are lower. But I wasn't expecting too much today. We'll take a look. I was really more so focused on content creation today. So there is that. I got a lot of stuff ready to go for you guys. Like a lot. I mean, if y'all thought 2 videos a week was a lot, you ain't seen nothing yet. Okay. What's good, Naruto, Willow, Trader Dad? I go live 4 times a week, brother. Monday, Tuesday, Wednesday, and Friday. What's good, Allie? Keith? You got a question already, Keith? Let me know. Let me know and drop it in the chat, man. Drop it in the chat. But what I will do is I'm gonna make I'll make it subscriber only today. I'll make it subscriber only today. I'll let the people in. Let them in. Let them in. You know? But yeah, so with it being Tuesday, that means we'll have our market review later this evening. What I ended up doing today was I'm going to do I'm going to not take it. I will take it down. I'm gonna take yesterday's stream down, but that's only because I'm gonna re-upload it as a video. So I took it down, I clipped it, and I put on captions. So I'm gonna re-upload the stream. So instead of having, you know, that in that list of like live streams, it's gonna be placed into an actual video. So it's a little bit easier for me to actually produce more content. But yeah, so it'll be like entry refinement or, you know, some shit like that. But what's good, Cunley? Forex Circle. What up? What up? So it's all good, man. It is all good while some subs in here. So yeah, let me take a look at today. It's been interesting. Now again, I haven't really looked at today. I've been focused on like other stuff. See, I still have like old markups on here too. I guess what I'll get into is what I talked about earlier about SPY and on my Instagram story about options. Excuse me. About options. What's good, Lamad? Yesterday, Monday, you said timing is key, and you pointed out an entry after 12 p.m. noon. Yes. Well, Central Time, yes. I'm not sure what part of that's a question, Keith. What up, Vadu? It's all good, Cunley. It's all good, man. Don't worry about it. But speaking of memberships, since you brought it up, we are at, I think, 91 or 92. YouTube is behind by a couple days, and so I try to keep up with the exact number, but, you know, I'm not always up to speed, but at least, where's it at? Right here. Okay, we're at 90 or maybe 91 out of 100, so very nice. We are on the up and coming. You know what I'm saying? We are on the up and coming. So, yeah, let me pull up bar chart. Let me just log in before you get to see what my email is. Because some people laugh when they see my email. I'm like, what do you expect? I made it like 10 years ago. What do you want from me? Am I logged in? I don't even know. Yeah, I am. Okay. So, if you guys have never seen this website before, it's actually a really solid website. Okay. Now, there's a lot of stuff that you can do. I don't have a paid membership to bar chart. I don't really care about their charts so much, but what I do care about is open interest, which you can get on bar chart for free. They do have COT. I don't really look at COT like that. And then they have options prices, and that's where back testing gets really fun. If you're ever able to back test some options, which of course I want to do with you today. So it's not really stuff that I got to do in the past, but on YouTube we can do whatever we want, and that's exactly what I'm going to exercise. Know what I'm saying? What's good, Olu? Nasdaq looked like a short off a bearish divergence, but they've all just rallied. I got you. We'll take a look at it again in just a moment. So did you mean not to enter because 12 p.m. isn't ideal? No, afternoon is good for me. So that's what I was saying. I know what you're talking about. That imbalance was created after the open of the afternoon session is what I'm saying. So post lunch. That's why I said timing's important. Was good, Leon? All right. So what I posted for you earlier today on my story. Now, if you didn't see it, that's okay. But what we're going to do is we're going to come over here to options prices. Matter of fact, let me see if I can turn this on. I forgot what this shit is called. Mouse highlight. Can you guys see that? Can you see the blue circle? Can you guys see this? Because it's going to make it a lot easier when you have a white mouse on a white screen. It's way easier to see the blue. My ring light's blue as well. Okay, you guys can see. Thank you. Thank you for that. I appreciate it. So, again, this is barchart.com. I'll put that in the chat just so you know. Okay, it's www.barchart.com. I'll pin that so it doesn't get lost. When you come here, you can search for a symbol. I search for SPY. Okay, SPY, SPY, literally. All right. Now, you might have to log in to get the options prices. That's okay. You can make a free account. Again, you do not have to have a paid subscription with them. I don't have a paid subscription with them. And so there you have it. Once you find SPY, I'm going to come down here to options prices. Okay. Now that's going to give us a lot of shit to look at. It's going to give us all this stuff. You're going to have a whole bunch of various expirations. Now, SPY is super liquid, so there's going to be a bunch of stuff here. I mean, weeklies, dailies, monthlies in here. Well, I guess dailies, not really, but bunch of weeklies, okay, that expire on a bunch of different days here, all right? Now, you also have, you can show all, you could only show like a few, and I don't even know what the fuck that even means, so that's great. But what I was referring to was specific. So if you look at, so today's the 20th. I think on the stream, or on my not my stream, I think on my Instagram, let me check real quick. Let me check one thing. Oh, I just want to make sure this is right. Oh shit, it came down too. Came down like a biatch. All right. So this was the 620. Okay. All right. And we were looking at puts. Okay. So what I was telling you about was the 440 put. Okay. Now again, look, if you're lost, just bear with me, please. Okay. Just bear with me. Trust me. I told you guys last week about the SPY 440 put. Okay. So that means what we're doing is we're not looking at calls because we expected the market to go lower. We're looking at puts because that means we're able to potentially make money if the market goes lower. Okay. So we're looking at puts, and it was the 440 put, which means we're going to come all the way down here to where it says 440, which is here. Okay. So that's this one right here. Now, it was up like the high of the day actually was like 475. It's back down to 2, which is interesting, but that's okay. If we can go over to option price history. Oh, fuck. They're making me look at it. I mean, they're making me do the free trial. Dude, we didn't used to have to... They used to give us this shit for free. Bastards. Because you used to be able to download it in an Excel spreadsheet. I may have to buy an account just to show you guys. Man. That is fucked up. me see if they give us a chart. Okay, well, actually, you know what? That's not what I wanted to do, but we'll take it. We'll take it. We'll do candlesticks. Hold on. Oh, that's the call option. Motherfucker. Give me a second. The put 440. Sorry. Normally I don't do this, but it's all on my phone, okay? But now I'm trying to portray it to you, and it's fucking ridiculous. So 440 option chart. If they would have just given me the fucking Excel spreadsheet, we wouldn't have to be dealing with this bullshit. Okay. You know what? This will work. This will work. But let me see if we can get a 15-minute chart. Okay. That's fine. All right, so take a look at this. Now, what I used to do when I first did a lesson like this is, I think it was with Walmart options. And what I did is I think I overlapped the chart, or I did like an Excel spreadsheet where I showed the chart and the options prices at the same time so you can see. Now, this is going to be really hard if you're not paying attention, okay? Like, I normally don't ask for your attention, like undivided attention, but trust me, you're going to need to pay very, very close attention here, okay? Now, watch this. When we go to SPY, okay? Now, for some context, I do need to put the tweet on here, so just give me a second for that too. We'll probably make this a video as well, because I'm probably going to teach you some things that I doubt anybody else is really teaching. You know, everybody can teach like, oh, smart money this, smart money that, and that's fine, but there aren't very many people that are really teaching options out there. Not like this way, at least. All right. Okay. So the reason that this is important is because of the timing, okay? So watch this, because I need to be realistic, all right? I'm not going to tell you like, oh, this was optimal, you know, you would have shorted the high and exited at the low. Like, I'm not saying that. But I do want to give you something that is realistic, okay? So it was 9:42 on June 16th. 9:42 on June 16th. $9.42 on June 16th. It was about $1.37. Okay? $1.37. I didn't buy it at that. I bought it lower than that. But $1.37. Okay? Now, if you're taking notes, this is what that means. An option contract, okay, is for 100 shares. Essentially. So you have the right to buy or sell 100 shares. So what you do when you calculate the price is you multiply this price times 100. Okay? So what that means is $1.37. What that means is if you wanted to purchase that contract, it would cost you $137. Okay? Now, because and this is the reason why I'm doing this, all right? Not just because I show you the versatility of when you understand price, you can trade whatever you want, which I've been saying for years, but it's to show you that you don't need a lot of money in order to trade, especially options. Okay. Now understand options are really, really risky. Okay. You got to know what you're doing, but this is why I'm trying to help you out the best way that I can. All right. So what I'm saying is if you bought that, like say you just saw my tweet and you didn't even bother looking at the chart. You just said, fuck it, I'm gonna buy it. $137. Okay. That's your total risk. The market goes, let's just say I was wrong and the market kept going up. That option would expire worthless. So you would lose that $137. Okay. So the risk is built in when you purchase an option or whatever. I'm not going to get into all the details, but just for like basic calls and puts. Okay. So that means this put option would cost you $137. Okay. Now around 12:45, it went down to 60. Okay. It went down to 0.60, which means that option contract is now worth only $60. So in a couple of hours, it was 137. Now it's worth 60. Okay. So yeah, you would have at that time in, I think 3 hours, maybe a little bit less, you would have been in drawdown by about $60, maybe $70. Okay. Now, by the end of the day, it was worth about 133. So if you went into the close on Friday, you probably would have been roughly at break even. Okay. Now, this is the part I'm trying to show you why options to me are worth trading. Okay. Now I didn't hold, full disclosure, I didn't hold over the weekend. 3-day weekend. Market was closed yesterday. I'm not holding into that. But look at what happens today. Remember, multiply the price times 100. So let's just say you bought it when I tweeted dog shit entry, $137. Okay. This morning, what's it do? It runs all the way up, and this 15-minute candle closed at 470. That means $470 per contract. Okay? 130 down to 60. Over the weekend, we open and rally up to 475 or 470. I think we peaked at like 490. So when we talk about risk reward, right? I mean, you could have even averaged down, which again, if you ever trade options, I don't usually recommend averaging down. Okay. But we went from 60 to 470. Guys, that's pretty awesome if you ask me. Anybody who trades Forex, I mean, especially futures, my God, futures, you gotta have some actual bread. Okay. Well, E-mini at least. Micros, you only have to have like a couple grand probably, but E-mini, I mean, you gotta have some, you gotta have thousands and thousands of dollars. But options have a very low barrier to entry. $100, $60 that ran to 400 and some change. You didn't even have to capture that whole move. You could have instantly gapped to 250, 300. And I can guarantee you some people would have went, oh shit, I spent 130, maybe even 150. Maybe your entry could have been super hot dog water. $150. Bam. All of a sudden, the next trading day, it's worth $300. That's $150. You essentially doubled your money even on a dog shit entry. Okay. And then you would have been probably pissed off that it ran up to over 400 and then 450. But this to me, I believe is the volatility. It could be a volatility premium. You know, I'm not an expert in options. I'm not going to ever tell you that I know everything about options because I absolutely do not. Okay. Fuck. I don't even know what some of the Greeks do. Okay. So full fucking disclosure. All right. If you're an options educator, you're probably looking at me going, what the fuck? All right. But what I'm trying to point out to you guys is that right here, we went from the hundreds, you know, roughly 100, maybe down to 75. That ran up to over 400 overnight, over the weekend. So this idea of, well, you know, I don't have a lot of money to trade. You don't have $100 You don't have a couple $100 to put into a huge risky account like that. That's a banger right there. Now look what happens though. Look what happens when your timing is off. Okay? If you thought on the 15th, said it was Thursday, if you shorted on Thursday, you would have paid anywhere from $300 to $160 a contract. And the next day it went down to 60. Okay, so think about that. That's some huge drawdown. You know what I'm saying? So I'm telling you, options can pay very well. They can, but they can also really rip your face off if your timing is not great. Now, this was a short-term contract, okay? Because this expires today. All right? This expires today. And we were trading that essentially on Friday. Now, if you had a little bit longer term objective, then the whole math calculation would be different. But this is the date, time, and directional specific. So it's for the 20th of this year, below 440. Okay? Very specific. But do you guys understand what I'm trying to portray to you? Look at that. From $100 up to 400, almost 500. That's a 1 to 4, 1 to 5 just over the weekend. And that's per contract. So think about that. $100, you could have bought 2 contracts. All right, so that would have costed you 200, and you would have been able to sell it today for over 800, 900 given a specific exit. $200 risk for $900 gain. I mean, some people don't even make that in a week, and this would have been done over the weekend. 3-day weekend, really. Like, bro, that to me, if I was a beginner, if I had like no money, if I had like maybe $1,000 to my name, and I was able to at least learn the skill set of trading, low risk, high reward setups, I'd be all over this shit. Because I can comfortably, if I was a beginner, I would be able to comfortably risk $100, $150 on a trade for it to go into the hundreds. Oh, hell yeah. Hell yeah. Appreciate that, Katrina. Thank you, thank you. Blurry's going long on what is that? Nasdaq? US 100 Nasdaq? Bro, DeFi, yeah. Yeah. I mean, you can see it in the math. I mean, if you spent $200 on a contract and it went down to $60, I mean, bro, that's some serious drawdown. You know what I mean? Like, that's why you never put the farm on it. But every once in a while, you pick the right direction and the right price. This is what it does. This is what is available to you. Well, I like this video. Oh yeah, appreciate that. Yeah, drop a like if you guys got some value. Because since we are looking at puts, this is essentially going to be the inverse, okay? So what I'm saying is, you see how when it was the 15th, or excuse me, the 16th, sorry, the 16th, right? Where we dropped lower, and then today was doo-doo, right? Well, up until right now. But that whole drop down today opened and then that continued lower. That is seen here. Right there. Okay? But now I can hear the ducks outside. They're screaming that it's fucking hot. And I get it. It's 94. I understand. So now that we've pulled back some though, right? We pulled back from, let me look at the chart. from 435 up to 438, closer to the strike, because this is where the strike price is at, 440, right? So when the market went our direction aggressively and violently, then yeah, the option was great. But now that the market is trading back up near the strike price, the options contract is losing value because it's getting back closer to the money. Does that make sense? So it's an inverse. The price is going to go up when we want the market to go lower for a put option. Okay. So hopefully that doesn't, I know it can be confusing. I didn't understand this shit for a long time. Okay. Trust me. When you first get into it, it's like, why even do it? But hopefully I've explained enough. Alt flip so we can see the correlation. Is that for bar chart or for trading view? You're probably talking about trading view. Yeah, it totally looks weird, but it's just with the options though, it's going to be a lot more volatile because you have the Greeks to mess around with. Delta, theta is time decay, data is certain movement for every $1. Like, I don't know. Again, I'm not an expert. I can't tell you every minute detail about options. Okay. I just can't. I don't know it. I've tried to get into that shit for a long time, but all right. My friend just texted me. They invited me over. It's Tuesday. But all right, I'll go over there. I'll go swimming. Because it's hot as fuck. Anyway, sorry that threw me off. I was just checking though, because usually he doesn't text me around this time. I'm like, might be an emergency. But there's that up movement, right? So that small pullback here is what led to that big pullback over in the options chain. Okay. So that's why entries and exits matter. But would you really let a $100 contract go up to $400, $450, and then not take profit or not take partials? Because here's the thing. Because this is what I learned about NFTs. Okay. What my people have told me, right? They taught me, Siva, Jordan, Zach. You know, they taught me a few things about NFTs. All right, and they basically said, look. If you purchase, let's say 4 NFTs, right? And then those NFTs go up in value. And let's say you sell 2 of those NFTs to now break even on your investment or whatever. Now you have 2 NFTs that are risk-free trades, right? So it's the same idea, let's say in options. Let's say you bought one at 100 and it went down to 60 and you went, okay, well, I'll buy another one at 60. Okay. So you're in on 2 contracts at $160 total. Okay. So when it opens at 250, you can sell one of them for $250. So now you got your 160 back plus $90. So now you got your money back plus 90. And then now you have one more contract that runs for 400, 450. So you could always do that too. If you can take multiple contracts. Now does it make sense? A little bit more sense, like why you would want to trade options? Break even, and then let the other 1 or 2 run. I mean, because you don't have to just buy 1 or 2. You could have went balls deep. Or sorry, I gotta be a little bit more professional. I forget we have women viewers on here. I'm sorry. Look, I was in the Navy. I was immature for a long fucking time. Okay, so I apologize. You don't have to put the farm on it. Okay, you could say $100. Okay, cool. Well, I'll buy 5 contracts. Okay. Then you could have got rid of 1, 2, or 3. held the other two. It's all up to you, man. But I'm showing you the lowest barrier to entry. One contract, $100, maybe $60, ran up to over 400. I mean, guys, look, if I was dead broke or just a couple $100 to my name, this would mean a lot. You know what I'm saying? That would mean a lot, because guess what? $300, $400, that's groceries right there. You know, that's realistic. That's realistic. Groceries or gas or an electric bill. Shit. An electric bill in Houston right now? Shit. That's blessed, man. And that was just one of many opportunities. All right. So, anyway, that's what I wanted to show you. Okay. So that's how you backtest options. All right. But remember, it's date specific, directional specific, and price specific. That's what the strike price is. So what we just witnessed was the 440 contract. Okay. So that means when we purchased this contract, it was out of the money. It was somewhere in there. So that's why when the market went up here, it went from $100 down to $60, because options, there's a whole plethora of reasons why options are calculated a certain way. And it has to deal with probabilities, right? The further out price is from your target, the less likely you are to get it, right? So like, say for example, right way up here at 443, if you were looking for sub 440, it would have been really cheap to get put contracts up here because it's so far away from this. Does that make sense? And that's why I'm trying to teach you guys, if you remember, if you've been following along with JP Morgan, right? When we were looking for 445, which we still haven't gotten yet. Hopefully we get there soon, because I'm getting really bored with this shit. But like, let's say down in here at 128, 145, that's a Hail Mary away. That's a whole Hail Mary away. So by like mathematical equations and stuff, they would say that the chances of getting to 145 is very, very low. Right? So I don't know if we'll actually be able to look at that today. Let me just see if they have it. So it would have been, I mean, if it was me, I would have went deep. Like 9, maybe 10. We'll do 9.15. And what do we say? 145 call, which is this one. Right? Is that right? Oh no, 145. Sorry. I'm tripping. 145. 145. Option chart. So can we do 3 months? All right, this looks pretty rough. Okay. So 413. That's obviously right there. Okay. So look at this. 413 was the day prior to earnings. Now, we weren't on YouTube at the time, but I still had a channel, my last channel. Okay. Rest in peace. We talked about how smart money was accumulating down here. I gave that to you because I told you to watch the earnings on Friday. Okay. So watch this. The 145 contract, which is the equal highs, above that actually. Okay. We're at the 128s, right? So that option contract would have costed you about $300. And it's fairly expensive. And I mean, it depends on what you think is expensive or not, but $300 heading into earnings, that's probably not the best thing to do. Okay. But look what happens the next day. When it opened at 500, went all the way to 600. On the 17th, still about 600. On the 18th, it went up to 700. Okay, so from 300 up to 600. Now, given that 145, it hasn't been traded to, and given probably the time decay and all that, it has come back. Okay, so I probably would not trade it right now, but do you see what the volatility premium can do given that big run here from the earnings? So look how price, right, has been rallying. It's been rallying to an extent, but the option contract hasn't really done anything. It's been rather stagnant. So that's why when I've always taught about options, almost every single time the market gaps into my favor, I almost always TP. Almost always. Because if the market doesn't do anything, if it goes lower or just consolidates, your option is going to lose value. Okay? But there's that. Okay? Now that's specific, again, to the September 15th. Now, you can go in here and you can spend all day on this shit because you don't have to just pick September 15th. You could have said, well, John, that was April. You could have went with something closer, let's say 721. And the 145 call. Let's take a look at that real quick. Because I have no idea what this looks like. That's why trading view charts are so much better than this ridiculousness. All right. So that week of earnings, we basically huddled around 160. Okay. So we'll just say 160, $160 going into earnings. 300, it opened, ran up to 400. 2 days later is worth 500. So from $160 to, we'll just say 400, 450. That's not bad. That's not bad. Now, given the market hasn't gone to 145, the strike price, look where it's at. It's back down to the $200 range. All right. Volatility premiums, earnings. Okay. And it has to go above 145. But I usually don't hold contracts to expiry, so I just don't do. I just trade the options just to trade the options, okay? But hopefully you guys see why options are pretty dope, okay? Be able to capitalize on movements like that with very little money, okay? Because in order to make that same, what do we say, 500 or $300, you would have had to hold $3,000 worth of stock for a few days. So think about that barrier to entry. $3,000 in stock or $150 option contract. You hear people say all the time, oh, you need a lot of money to make a lot of money. No, you don't. No, you don't. A 10% move to get $300, you would need $3,000 worth of stock, worth of shares. Or you could have had an option contract worth $150 that ran up there after earnings. So whenever you hear somebody say you need money to make money, just backhand them across the mouth. Just kind of back. Okay, just do something like that. Just tell them you don't know what you're talking about. All right, just do that. Just go, you're an idiot. Don't do that. I don't condone violence, all right? Just try to have some fun, okay? But yeah, 2020, you can rewatch this many times. So now you understand what I look for when I say, hey, I'm long McDonald's, I'm long JP Morgan, I'm long Wells Fargo, I'm looking to short SPY. Now you know there's a whole other world out there. A lot of people don't even know all this shit goes on behind the scenes. People just think, oh, you gotta buy a bunch of stock and then sell a bunch of stock. No. That's not how this works. No. Options are leveraged, man. Highly leveraged. That's why it's dangerous. And I've never not told you that. There's risk involved in trading. You guys know that. But it's with any leveraged instrument, it's volatile. All right. Wells Fargo pulling back a little bit. That's okay. JP Morgan is kind of just dancing around. But it looks like it's still heading there. Again, we got to give it some time. No rush. No rush. But anyway, let's go back to the indices on an intraday basis. Because I feel like you guys... I mean, I didn't really plan on trading today, I'll be honest with you. I didn't plan on doing anything today. We really didn't gap all that much on Sunday, did we? I got some notes on here. I got some YouTube videos coming. I was gonna record it and then I decided not to. But I am gonna put out a risk management video. So there's that. But I was trying to see if there's Sunday's gap on here. And it doesn't really look like we gapped very heavily. Well, so the only thing, I mean, all right, you've got some highs on the Dow. And I think we looked at that earlier. But the problem is the Dow's our weakest index today. So I would probably be reluctant to trade that. I would be a little bit reluctant to trade that. It's 12:50, which means we have 2 hours left in a day. So probably not very good. Did someone say earlier they were longing Nasdaq? Did one of you guys say that? If in trading view, if the price goes lower, it means that the option is going higher. Well, Katarina, that's for we were looking at put options, which means we would make money if the market goes lower. It's kind of like shorting. When you buy a put option, you're essentially shorting the market. So that's why that contract went up, because it went into our favor. But the whole point of that tweet was to show you when I was tweeting. So I was trying to give you a realistic expectation. I didn't time it very well, is what I'm telling you. It wasn't timed very greatly. Okay? I mean, it went against me a little bit, and then it completely got obliterated on Friday and today. So what I was trying to show you was what the contract prices were here. 130, maybe 60 bucks. Today ran to 475. So there was hundreds of dollars on the table per contract if you held over the weekend. I told you I didn't. I got out of here on Friday. So I didn't really capture the majority of the move, but I wasn't willing to hold over the weekend. So that's just me. But what I'm trying to do is show you what's available to you. When you understand price, what is available to you, you don't have to trade futures. You could just come on here for futures analysis and say, you know what, John? Well, I don't have like a couple grand to open a futures account with. No problem. Options are available to you. Literally, quite literally, options are available to you. That is kind of what I'm trying to portray. Low barrier to entry. All right? That was the point. So yeah, JP Morgan wouldn't be the inverse because what we were looking at was call options. So we want the market to go up. So then there would be a correlation if it goes our direction. But what I'm telling you is due to time decay, the option has lost value because it's not going your direction. So it loses value over time. And I know options are complicated. I know. But that's why I'm here trying to give it to you the best way that I can. All right. I'm just trying to do my best. That's all. Was good, Andreas? And it's all good. This is going to be recorded. I'll probably do the same thing as the other day. I'll probably drop the live session and just post this as a video without all this shit though, like the actual segment of the options part. Not like this. I'll cut this part out. So we have highs on ES as well. Do we? Do we? I guess we do. I guess we do. But remember the time constraint. There's only 2 hours left. I mean, we could. If these were equal, I would feel much better about that. Because what I think now is, I think it's just looking to dig back into that gap. So we opened there. So we closed on Friday at 439.44. We opened today lower. We rallied a little bit and then dumped. So it just looks like price is digging back into this overall imbalance here. Which, I mean, I could see. I don't really know. I thought we were going to trade. Personally, I thought we were going to go lower, but I'm not in anything, so I'm not going to be mad if I'm wrong. I mean, I'll always be, you know, somewhat. I mean, I'm not going to lose the sport in me is not going to go away. But I'm not trying to be right today. I'm not doing anything today. Today was a content day. So just the long-term plays that are happening right now. That's it. So right now, I think it's at an interesting place. Well, we took a short-term low, and then we're back into this imbalance, or a gap, really. So for me, this, I think it could go either way. It could go either way. Tuesday, and we're coming off of a 3-day weekend as well. That's why I purposely took today off. I wasn't going to try and find anything today. And I'm kind of glad I didn't, because I feel like if I was trying to long, I don't think I would have gotten in anywhere. Because I'm looking at this and I'm not really digging what we did here. What we did here. I'm not really liking that. Like, I don't see my mitigation model anywhere. I mean, maybe that, I guess, but that looks like shit. I probably would have left this alone. And then I would have been pissed off that I would have sat in front of the charts for hours and then not did anything. I'd have been mad. I'd have been like, well, damn. What am I supposed to do now? So, we'll see how this goes. It is hard to say. It could just be reaching back into this imbalance here. It could just be revisiting this 15-minute imbalance to go higher. I don't know. I think it's too late for me to long. And it's late in the day, too. Okay? Do I think Nasdaq will take the morning high? Man, I don't know. This one? Probably not. I don't think so. Because this is the high that took a bunch of liquidity. I mean, you see that high, this high, this high, this high, and that one. So you had a run up past, well, this one was first, so we'll take that one off. But like that run specifically there took 1, 2, 3, 4 highs, and then absolutely dumped lower for this one, or for the low rather. So when price does that, to me, it's really hard for price to get back up above this because it's already ran liquidity once. Okay? So for it to run liquidity again, I just don't think so. I mean, you guys already know I'm susceptible to being wrong. But to me, that's a lot. See how it's digging into that imbalance? Here? Not this, I don't think that was the same one on the S&P though. That was why I was trying to flop back and forth. This is the lower one. This is from 11:15. Oh, that was lunch. Ugh. Yuck. But that's not surprising. Plus, yeah. So does that make sense? Like when you guys ask a question and I try to answer it, I try to answer it in the most complete way. I'm not just going to tell you like, no, I shouldn't do that. I want to tell you why it shouldn't do that. Does it make sense? We ran a bunch of liquidity, then dropped off the face of the earth, and now we're back up again. So, I mean, we can, but it's going to have to take a lot for us to get there. That I just don't see happening. I just don't see it. But I would study this though. I would study this 15-minute imbalance. You have a recent low here too. It could just be a run on stops, but again, look where we're at, man. Logically, we're at the higher end of today's current range. I don't like buying when this is high or when price is like this high on the range. It's a lot. And I just don't like doing it. There's a lot of things I don't like, okay? Traffic's one of them. Drawdown's definitely one of them. Liars and cheaters, that's definitely at the top of my list. And then buying when price has already rallied, that's probably in the top 5 as well, okay? So, do what you want with that information. Yeah, see that 1 hour too? Look at this. Look at this. See that right here? See that? Price has to do a lot to get above that. Just don't see it. I was able to get on a buy for 380. Waited for the low to form before entering though. For SPX. So I don't know where 4380 is because our math is going to be different. But I'm assuming maybe down here. I don't know. I don't have SPX. I don't look at any of the ETFs. I mean, I look at the ETFs. I don't look at any of the CFDs. Plus, their math is just weird. There's 4 ticks to a point, whereas they do like 10 pips or 100 pips. Like it's weird. You know, you got people. Oh, I called a fucking 1,000 pip move on US 30. Okay, well then I called a fucking 500,000 pip move then, because we called like the low of the year a couple years ago. That's good marketing though. 500,000 pip trade. Yeah, that's one hell of a marketing scheme, but that's just stupid. You know, you see those people, oh, we caught 3,000 pips this month. We caught like 20 on Euro and 50 on British Pound and 1,900 on US 30. Get the fuck out of here. Get out of here with that bullshit. I don't market that shit. What I market is, hey, we tweeted up here and it went down. You know? like an actual skill set. Keith says, I'm a member, but I'm not green anymore. What the fuck? What happened, Keith? What just happened? How'd you get bamboozled, man? I don't know what to say. I really don't know. I promise you I have no idea. I don't know what happened. It's not like I banned you. You know? I think it was last week, you know, someone said that I don't give trade ideas because I'm scared. Okay. Well, what the fuck is this then? What is this? S&P sell off inbound and then we sell off? What part of scared is that? Go through my tweets, bro. There's plenty of calls. People are weird, man. People, you don't even show up on the stream, but yet you want to comment. This shit makes no fucking sense to me. It's like people who read books or comment, excuse me, they comment on a book that they haven't read. It's like, shut the fuck up. What type of stupid ass shit is that? Your book sucks. Okay. Well, which part did you read? Oh, well, you know. Nah, bitch, you ain't read it. You didn't read it. Shut the fuck up. People are weird, man. Real talk. Anyway, we're going to wrap this up here in a minute because I'm pretty much done for the day. Okay? GU and EU recap. I got notes over on Euro right now, so I'm not going to do that. But I will look at it for I will do a overview of dollar index, euro, and British pound for the market review tonight. But the market review are member only, so you're gonna have to become a member to see that. But hey, man, memberships are cheap, bro. They're super cheap for now, at least. We're probably gonna do a tier 3 this year. But I'm good for right now. We're chilling. Oh, Keith was logged into your other YouTube. Okay. Gotcha. I'm giving you everything. I try. I mean, I've given you entry techniques, stop loss placement, trade management skills, order flow, you know, low risk, high reward setups, risk management techniques. And then I fucking tweet you what direction I think the market's going. I mean, God. I mean, I'm showing you how to hunt, and then damn near showing you where the deer are at, and then tossing our spears over there, right? And then dragging the gazelles home, and then cooking it, and then you want me to put it on the plate and hand it to you. Jesus. You got to learn the skill set so you can do this for yourself, because I'm not going to do this forever. And people who, you know, trade and teach trading, they probably aren't going to do it forever either. And this is why it's so crucial to build the skill set so you don't have to rely on anybody. I mean, I want you here on YouTube, but you don't have to be here forever. I want you to be, but you don't have to be. I'm trying to teach you how to hunt, how to fish, how to not be an idiot, how to read books, how to take notes, you know, different Stoic ideas, leadership ideas. We got plenty of more leadership videos coming soon too. Teaching you about options, low risk, high reward options. I mean, fuck. What else do you want me to teach? You want to teach you how to fucking wipe your ass too? I mean, dude. What else do you need from me? And yeah, Leo, that's what they wanted. They just wanted, tell me when to get in and when to get out, manage the trade and all that shit. I'm not going to do that, bro. I have done that in the past. Hey, here's an imbalance. Let's watch it. If we have one downside objective and one concept, what do you think that means, bro? What do you think that means? Oh, it means John's fucking scared. You're right. You're right. I'm just scared. I'm just a little bitch. Just scared. I tremble in fear. And I cry. But anyways. Had to not be an idiot. Yeah, exactly. No, that's what I'm saying. Had to not be an idiot. Y'all think it's funny, man. Y'all become a mentor one day and you deal with people's bullshit. Now I get now I understand what all my teachers were going through back then. Dealing with me. Dealing with, oh my God, like teaching, like to be a teacher at like high school or some shit. Oh my God. Now I see why they were always in a fucked up mood. Dealing with 17 and 18-year-olds all day. I'd rather shoot myself. You couldn't pay me enough to do that. I'd be cussing them out, bro. I'd be like Bernie Mac. Like, sit your fucking ass down. You ain't going to the bathroom. Finish your test. I'd be terrible. I'd be such an awful teacher in high school. If I was ever a teacher, I would need to be a professor. You know? Because I'd be like, look, you want to show up to class? Cool. You don't want to show up? Cool. I'm going to teach. I'm going to do my thing. You do whatever you got to do. You paid to be here. I'm going to get paid. And what you do is up to you. All right? You don't got to raise your hand for shit. You want to text in class? Go ahead. Whatever. I'd be laid back as fuck. And that's exactly what I would tell people. Like, I'm getting paid. Be like, I'm going to teach you philosophy, but I've also got these charts over here too. So, you know, we're making money hand over fist. So I don't care if you fail. You know, you don't want to study for a test? Don't. You think I'm going to watch you? I'm going to watch the markets. Shit. I'd probably be a terrible professor. I'd probably be awful. I'd dress like a Stoic too, have like a long beard, wear like black t-shirts and shorts and slippers. I would look like a bum. But I'd probably be one of the richest people on campus. Not that that matters, but that's just how that's how I would envision the life of a college professor. But yeah, you're right, Andres. Teachers are severely underpaid. They are, and I get it. But I think we've had this conversation before where I told you about teachers and what I would do. I wouldn't just teach in person. If I was a teacher, oh, I'd be all over online too. I'd be doing I would charge for like studying or whatever. Like I'd be like, look, if you need more help, cool. You know, you and your parents can come to my house and I'll teach you, you know, for fucking, I don't know, 50 bucks an hour or something, you know? And I'd make money that way. I would probably have Udemy courses. I'd be selling out the ass. I'd be promoting that out the ass. I'd probably be teaching other shit like how to play the piano. obviously how to trade, but if I was a teacher by profession and if I didn't trade, that's what I would do. I'd monetize every aspect of teaching. I'd be making probably one course a week for like years, and I would just have hundreds of courses on everything. How to do whatever, how to read, how to do math, how to do science. Well, I don't know shit about science, but I'd do history course, philosophy course. Dude, I would literally teach hundreds of different things just to have that, window, like, what the fuck is the right word? It's like you don't want to just specialize in one subject, as like a teacher of high school or middle school or even younger. I would want to have courses on everything, and be able to market that on top of being a teacher. I agree, Naruto. Yes, Andreas. I would probably teach an evening class. Trade during the day and then teach in the evening. Is probably what I would do. I sometimes get into a trade, but a little retracement scares me and I got myself out of the trade, and then the trade pans out. Well, that's a trade management thing. And it's a stop loss thing too. Like, trust me, trade management is difficult, but when you study, you'll understand which imbalance is likely to hold, where the stop loss should be, how long it should spend there. Price should run to your target. And if it doesn't, you're probably wrong. Like, there's all types of scenarios. Like, if I was bearish right now, which I'm not, because I'm not really sure today. But let's say we shorted this. Okay, please don't. This is just for hypothetical studying. Okay, do not short this market. But let's say I was bearish. Okay, I'd go, all right, well, 250, 250 is like right there. I'd be like, okay, I'll short that with a stop probably at this high. Okay, the candle that completes the imbalance, that high, boom, that's my stop. So what I'm saying is I'm allowing breathing room. I'm allowing the trade to go against me some. I'm expecting that. Okay, now we didn't do any type of like smaller, entry techniques. We're just saying strictly based off the 5-minute. There might be a mitigation here too. Maybe not. It looks kind of shitty. It doesn't really look good. Like that. Maybe that. Maybe that candle there. It's only 252. Okay. So if it were me, I'd say, okay, well, let's watch it. Does it go against me sharply? Does it get me in and then immediately go my way? Or what are the next 2 or 3 candles going to do? That's going to give you some more information. Okay? It's okay for the market to go against you. What I would be more worried about is if it closes above this imbalance, then I would be worried. Because I'd go, oh shit, that imbalance isn't going to hold. Then I would likely close it, and then it wouldn't go to my full stop. And then I would just take a partial loss, and that's just it. But you got to understand, sometimes you're not going to get the wick entry. Sometimes you're going to take some drawdown. But don't be focused on the money side. When you open a trade, you should be comfortable with losing whatever that full amount is. Okay? But I understand you know, having drawdown is a little bit, it can run your nerves a little bit. Like if this starts to trade higher, I could see why that would bother you. But I wouldn't really have full expectations until a couple of candles go by. See, like right now, it's against me on this hypothetical idea. But we gotta let it pan out. Okay? My dad is post-secondary teacher in finance and saw how much work he was doing for the school, so he said, screw this, and created his own school curriculum. Yeah. Of course, it's a lot, bro. It's a lot. Because, you know, teachers, and this is why when I provided homework, I didn't really want to like give feedback, because I was telling you guys, this was years ago, but I was saying to do like mark up 100 fib retracements, mark up 100 imbalances. I'm not looking at all that shit. For each one of you, bro, my eyes would melt. 50 to 100 students at 100 charts each? No, hell no, bro. And it would even be worse for a professor. Oh, write a 6-page paper. Shit. 20, 25 students, a 6-page paper each? Hell no. See, like this would probably be a little nerve-wracking. Have it just kind of breeze past your entry a little bit. I get that. But I'd probably watch it and go, okay, well, how do we respond here? What do we do there at this potential mitigation? Because this is a potential mitigation and you have an imbalance here too. So I would just wait, see what it does. But I wouldn't, I mean, it's okay to be nervous, but you got to focus on the market. Don't be looking down here at the P&L or up here looking at your money going, oh shit. You know, you don't want to do that. So basically the line in the sand for me is probably this smaller imbalance here. But again, that's if I was bearish. I'm not bearish here, okay? If I happen to be bearish, like that's what I would give it. So my stop loss would be above, you know, this imbalance here. In case this thing isn't bearish, I could close out at a half loss instead of a full loss. Okay? But I'd probably watch this and be chilling. Okay? But yeah, don't short this market. Do not short the Nasdaq right now. This was strictly hypothetical. Okay? This was strictly just looking at charts to see, you know, what's going to pan out. I would not put any money on this. Okay? We'll just see what we do though. But we're going to hop off here in just a minute. But I think that's a lower low right there on the Nasdaq, and we have a higher low here on the S&P. So this probably is bullish. And it did come back. We talked about this imbalance, how it came back into it. So it has respected that. So Ali might be right. We might get 445 or 446 probably. Watching the bootcamp videos you made, and I wanted to thank you firstly for that. How long did it take you to become profitable and actually make a living and keep it going? A long time. It took a long time. One of the harder things about trading for me, one of the hardest things to do even to this day, okay, even after almost 9.5 years, okay, one of the hardest things for me emotionally is scaling up. Because, you know, $25 risk, $50 risk, whatever. I mean, I could forget about a trade. Okay. But when you start getting into like $500 risk, $1,000 risk, I mean, that shit can bother you, man, because it only goes up from there. You know what I'm saying? So we, in our lifetime, I don't know about you guys because we're all different, but you know, a lot of people, they grow up, I don't want to say poor, but they grow up not wealthy. Okay. And so a lot of us have a certain attachment to money. Like we value money because we put either an emotional or a monetary attachment to money. And I know that doesn't make sense. Well, John, it's money. It's going to have monetary value. I get that. But if we take those emotions and those values into the charts, that's going to screw you up because you're not going to look at, let's say a $100 risk is 1% on a 10K account. You might think, all right, well, I lost $100. Some people might think, all right, that's not a big deal. I only lost 1%. But some people might be like, damn, I just lost $100. You know, that could have got me some groceries for this week. That could have got me some gas in a tank. You know, that could have got me baby formula or whatever. You know what I mean? And so that right there, I think can really take a toll on people because it did to me. I mean, even to this day, sometimes I look at what 1 or 2% is of my net worth and I'm going, fuck, I don't want to lose that. You know what I'm saying? Because I'm telling you, for some people, I can't speak for anybody else. I can only speak for myself. But scaling up risk at a certain point just bothers me. Then I'm really forced to go, okay, stop looking at the money. Just focus on the market. But even then, it's hard to see these points and not go, all right, I'm up 3 points. So I'm up, you know, X number of dollars or whatever. Like it's so hard to do that. It's hard. Because it's just how we grew up, man. You know? Some people grow up with no money. So when they get into trading, they know they're operating with money that can potentially change their life. And that, I'm telling you, is hard, it's difficult. It's one of the hardest things for me. I'm telling you. I mean, it definitely helps when you get better entries and stuff like that. But even then, I've psyched myself out of really good trades before. Like really good trades. I mean, I would have made, we're talking in a matter of hundreds of dollars within minutes or a couple $1,000s like within a week, you know, like that would have been easy, but I just missed it because I just goofed it up, you know, and that can take a toll on you too. And that's why I tell you guys not to be so hard on yourself. Because if you start doing that, oh, I missed out on this much money. I missed out on this and that. And I'm trying to, you know, I want to retire my family and shit. Like, bro, this is why goals need to be somewhat achievable, okay? I'm not going to come on here and tell you, you need to pay my membership if you want to retire your mom. I'm not going to say no stupid ass shit like that. You know what I mean? Because that's just retarded. I'm not going to emotionally control you to buy my membership or to buy my book. Like, bro, no. Okay? The only thing I promise is that I think you will learn more about the market. I think you'll learn how to read the market better than you did before. I can only promise that I'll do my best. I cannot promise profitability. I can't promise you're going to retire your mom or your parents by next week, okay? You got to really scale the fuck up if you're going to do that. I mean, big scale. Multiple funded accounts. You know, multiple like 3% gains, 5% gains, like over and over and over again, like that. Okay, I could see that, but for some people, man, I'm telling you, the struggle is real. The struggle is real. But that's going to be it for today. All right, I'm going to hop off here. Probably go read. I still got to work on a lot more content for you guys, you know, more videos. Still got to put together this leadership stuff. I got to shoot some more YouTube videos, because remember, we have membership only videos, but I have to put out content for the public as well. So there's a lot of shit. If you ever get into content creation, you got to understand what really goes into this shit, because it's a lot. Shooting, editing, dude, try it. But yeah, we'll put an alert. I'll tell you what, we'll put an alert at 446 or 445 rather. We'll see if that gets hit today. I'm not going to be in front of the charts right now. Again, I'm going to go do other stuff to focus on the content and all that shit. And then we'll put out the membership only market review here in a little while. All right. But that's going to be it for today. Hopefully you learned something. If you did, drop a like on the video. I would greatly appreciate that. And don't forget to share the channel with your friends and your family, or even on your social media if you want to help grow the channel. You don't have to if you don't want to. It's not a requirement. I can't force you to do anything, but that is pretty much the only way that we grow here. It's about getting on the algorithm, and it's about word of mouth, man. That's really all that we can do. So that's what is in our control. So that's what we're going to focus on. And we're going to leave everything else after that. We're going to be indifferent to it. Okay. So thanks, guys. And I will see you later today and tomorrow.
Happy on the outside, weary inside, sliding the depression. They think I'm moron. Calling, calling, calling. It's the freedom I shouldn't have, with the people I shouldn't know. I might as well end lost that. It's the only thing that I fucking do.
Like a broken soul in a water